Is this the great deceleration we've been waiting for? Are the big jumps in home prices behind us now? More on that in a minute. Hi everybody, and happy holidays to you once again. Joe Hillner with your Home Sold Guaranteed Realty, where we will sell your home for just a 1% commission, guaranteed. Okay, so every week I share market data to keep you informed with the local real estate market, and here is this week's Boca Market Watch. First, single-family homes. This past week, an off week with only 29 new homes on the market, ranging from $370K to $6.4 million. 23 homes back on the market, while 11 homes took a price decrease and 9 sellers raised their asking price. In a lackluster week with 31 different properties under contract and 21 going pending. And 35 homes were unsuccessful in selling and taken off the market or expired outright. That might sound like a lot, but most agents have their listing contracts expire on the last day of the month. So in a more normal inventory situation, that number would be well over 100. And a pretty blah week for sales with 43 homes closed in the past week, ranging from $336,000 to $7 million. Next up, condos and townhomes. 50 new listings, not horrible, ranging from $75,000 to $4.65 million. 17 units back on the market, 24 with a price decrease and 7 sellers with an increase. 35 different properties under contract and another 40 went pending, so-so. And 40 condos or townhomes unsuccessful in selling and taken off the market or expired. 82 closed sales this week, another decent week for condos, ranging in price from $45,000 to $5.5 million. And here's what's making news right now. Home Values just posted their second consecutive month of decelerating price growth. And here's why it will continue to slow. According to an article in Forbes, here's the bad news for home buyers. Over the past year, the U.S. has seen the fastest period for home price growth in recorded history, even greater than any of the years leading up to the 2008 housing bubble that burst. The silver lining? Home Values just posted their second consecutive month of decelerating price growth. Year over year, U.S. home prices rose 19.1% between October of 20 and 21, according to the CaseLogic Index, the leading measure of residential real estate prices. That's down from an all-time high of 19.8% from August of 20 to August of 21, meaning that home price growth started to cool in the autumn. But that slowdown is bigger than it might first appear. See, that year-over-year period still includes the frenzied 2021 spring housing market, during which bidding wars hit an all-time high. So when you look at the last 2 months for which data is available, September and October, home prices rose only 0.8% month over month, which is significantly lower than the 2.3% back in March and April. However, home shoppers should not mistake this latest slowdown as price relief. 19.1% up is far above the average 3.2% pay raise workers can expect this year. That being said, there's a growing consensus that deceleration in home price growth is just getting started. And that price growth slowdown has the potential to be even more substantial if the Fed pushes interest rates up by more than expected because they're concerned about inflation. And if the interest rate of the average 30-year fixed-rate mortgage, currently at 3.2%, were to rise even 0.5%, it would have the potential to lock out some buyers from the market altogether. It would lower demand and lower levels of home price growth. Daryl Fairweather, the chief economist at Redfin, said, mortgage rates will rise to 3.6% this year, bringing price growth down to earth. And this low price growth will discourage speculators from entering the market and allow more first-time buyers to have a chance of winning a home. Sounds good. In the same report, Redfin predicts that annual home price growth this year will plunge to 3%. And if it happens, it would be the slowest year-over-year change in home prices since 2012. That assessment of continued price growth deceleration was shared by every forecast model reviewed by Fortune. And among the 8 models that they looked at, the most bullish are Zillow, 11%, and Goldman Sachs predicting 12.6%. While those forecasts would mark a serious numerical dip from the 19.1% we've seen over the past 12 months, that's still a significant increase at more than double the average annual rate that they've grown since 1980, which is 4.6%. And Freddie Mac and Fannie Mae are both predicting over 7%, another example of an above average year. Meanwhile, joining Redfin on the more bearish side are Realtor.com, forecasting 2.9%, and CoreLogic, 1.9%. And the Mortgage Bankers Association, which is predicting the median price of existing homes will drop 2.5% by the end of this year, has the loan model predicting a price drop. So what does all that mean? Price increases are likely to slow down. But as to how much they will slow or how low they will go, no one really knows. So you may as well just ask your know-it-all neighbor. Okay, that's it for today. If you'd like some specific market data on your neighborhood, just give us a call at 954-799-6867. If you're watching this on my YouTube channel and you like the information, please don't forget to hit the like and subscribe buttons down below. Till next time, this is Joe Hillner with Your Home Sold Guaranteed Realty, signing off for now. Go serve big, everybody, and be nice to each other. I'll see you next week.